What's going on, guys? So I actually backtracked on the previous tracking that I had on the micro, and I've come to the conclusion that it was right to begin with. It was correct to begin with. And I'm going to show you what I mean. So let's just jump into the video. This video should be pretty quick, but I want to touch on some charts here, starting with the macro, which nothing has changed about this. So you have the downtrend from 2017 until you squeeze January 2021, and then in the current cycle would be the equivalent to this downtrend that you see here. Again, macro break here, both gap downs. The W that plays out on both sides before you get into the downtrend, just legging down one leg at a time. So 6 points takes you to the end of the blue on both sides. 6 points takes you to the end of the blue. And then from that 6 point, you drop down to the flat portion where you have 3 touches on the bottom. So 1, 2, 3. You form an uptrend, you break out, you retest, confirm the retest, gap up right here, macro fractal break, straight line into your squeeze. Over here, I'm reverting to the previous tracking. I believe this was correct to begin with, and I'm going to show you why. So over here from your 6 point, dropping down to the flat portion, 1, 2, and 3. So for the third bottom, we were looking for a lower low that never happened. And then we broke out and got this crazy ass move after hours up to $9. And from there, we came all the way back down, and right now sitting at $1.95, which I believe this is just a retest of the macro downtrend here. My last couple of videos saying this was the third peak of the tri-peak, just an exaggerated move. I don't think this move was exaggerated at all. I think this move was actually the breakout. And the breakout here, it was not exaggerated. This is what should have happened. And then now coming down for the retest, and this is where we are today. And, having done this, so a couple things happened here. Previously back here, you formed your lower low here on your third bottom before you broke out and got the retest, and then you confirmed. So you didn't form the lower low on the retest. You formed it on the third bottom. And I'm going to go over actually a few reasons why this tracking is completely plausible. Number one, having to retest this trend, the retest took much longer than it did back here. In order to retest this trend, it had to form a lower low. That's number one. Number two, you could argue this was to shake anybody out. The algo trying to shake anybody out, knowing what's about to come, triggering all stop losses down here in this range pretty much at all-time lows. If you have any stop set, those were triggered. That's number two. Arbitrage for AMC and APE to meet at a common price would be number three. Number four, filling all the open gaps to the downside. Just completing the macro as a whole before we get our next macro, which theoretically could be MOAS. Price target for me is 140. I know other people have a much higher price target, but I think the tracking was correct to begin with here. And for all those reasons I just stated, arbitrage, AMC, and 8 meet at a common price. We never actually got the lower low, so by retesting in this fashion, we actually checked off the lower low that we should have got to begin with. Triggering stop losses to get anybody out last minute right before we take off, and filling all the gaps to the downside. So, and this is not speculation. I'm going to show you why with charts too. So, moving on to the next, and this is just zoomed in a little bit on the flat portion now, just showing you I believe that it was correct to begin with, and the move to $9 was actually the breakout, and what we're experiencing right now is actually just an exaggerated retest. Not really exaggerated, for all those reasons I just listed. We had to come this low to retest this trend, so it's not really an exaggerated retest, and also checking off a bunch of things I just said. So I believe this is where we are now. The previous couple videos I was saying potentially this was the third peak of the tri-peak here, and now coming down to your lower low, as you saw here for your third bottom. I don't think that's the case, and I'm going to show you why. So if you remember 2 weeks ago, I was live streaming, and all week I was tracking this. And what we're looking at here is what I just showed you, the yellow boxes. So we're looking at this, and we're looking at this right here. So, before all of this happened here, this was just a gap up, come down to retest here, the consolidation. Comparing this move here to this move here, which is where we would be on the tracking on the macro. zooming in on this, and this is what I had. And 2 weeks ago, I was live streaming, and I was tracking this all week, and it was tracking absolutely perfectly. And I've gone back now, and I absolutely love the way this looks. So we'll just start with what I had 2 weeks ago. So you have the gap up here and the gap up here. You get this crazy wick, as you see here. Come up higher, you get this W move right here. As you see right here, it's scrunched right here before you get the top. Then you come down to the red, right? And then you form the stair-stepping move, stair-step there, stair-step there, and then you get the uptrend, right? So you have the uptrend, higher highs and higher lows here. You actually break below the trend, come back up, reject it, and then gap down. So this is what I had, and we were remember if you remember me saying we were looking for a gap down to this white line here. So fast forwarding to today, with this updated now, same exact chart, and yes, this came much lower than the white line, and I just gave the reasons. I'll say them again. We never got the lower low on the macro for the third bottom that we were supposed to. So having come this low, we checked off the lower low, the final landmark to the downside. Triggering stop losses last minute right before we squeeze, shaking people out, paper hands, if there even is any in this community. I don't even think there is. Filling all of the gaps to the downside on the daily for the whole entire macro. So filling all the gaps on the macro as a whole, and then arbitrage, AMC and APE meeting at a common ground for the conversion to go through. That would justify this move here. And this actually played out the way it should have here. So here was the rest of the uptrend. So again, gap up, you get the wick, gap up the wick. The top, you come down to the red, the stair step here, and then you get the uptrend. So you have the uptrend here, you break below, come back up, reject. So come back up to reject it, reject the uptrend, as you see here. So we actually broke below it, came back up, and rejected the uptrend here before you get the gap. So remember me saying we were looking for a gap to this white line here. We gapped much lower, but the price action is doing exactly what it should. So we gap down, and then you form an uptrend from the gap down. So the initial candle where you gap down to, you actually form an uptrend, forming higher highs and higher lows here, which is what we did. Gap down, forming higher highs and higher lows here, before you come down to a lower low than the original gap down point, which is exactly what we did, coming down to a lower low. And just looking at this move here, there's actually 3 legs down to it. So you get the first leg here, bounce up, second leg down, lower low, bounce up, and the third leg down is where you form the uptrend. So first leg down, bounce up, second leg down, first leg down, bounce up, second leg down, bounce up, third leg down to the bottom here. I'm pretty sure the bottom's in now. We should be forming an uptrend from here. If this tracking is correct, which I'm pretty sure it is, what's left of our macro is this. An uptrend back off and the rest of this price action, which theoretically this would top out around $5, $4.50 to $5, this price action here, which when the reverse split goes through tomorrow, it would be $45 to $50. And then right after this, you gap up again, and that's your macro break, and straight into your squeeze from there. So it doesn't end there, and I want to touch on this now. So having said that the tracking was originally correct, where this is not the third peak of the tri-peak, rather this is your breakout iteration that you're seeing here, and now what we're witnessing is the retest right here. Looking at the OBV on this, so here's the OBV rocketing in June. June all-time highs stock price, and then June all-time highs OBV same time. And since all-time highs in June, 72, we've come all the way down to $1 now, $2. And during this time coming down, forming lower highs and lower lows, OBV has actually been forming higher lows this whole entire time, trading in this triangle here, bouncing off the bottom, reject the top, actually break through slightly here, but reject again, come back down to the bottom, come back down to the bottom, break below, reclaim, bounce off the top, bounce off the bottom. And on this move here, which we're speculating was the original tracking was correct, this was actually a breakout here, OBV actually broke out on this move. So trading in this triangle the entire time until this move here, OBV broke out and has now come down to retest while we're retesting. So OBV broke out on the macro breakout on the actual stock. It broke out there and is now retesting the breakout on OBV the same way we're retesting the breakout on the stock. So that looks very nice. Very, very, very good there. Pretty much confirming the tracking from the beginning was actually correct. And I just want to touch on this really quick as well. So this is looking at historical price action of AMC from IPO, and OBV is on the bottom here. So this is when AMC was actually a regular stock, a normal stock traded like a normal stock would trade. OBV is pretty much flat this whole entire time. And then you hit all-time high OBV right here, this green dashed line here, which is actually right in the middle of the tri-peak here. And then you reject there, and then when you finally break through to all-time high OBV, which is right here, you break higher than this, that is right before you squeeze in January 2021. So the vertical line is showing you. And then you do squeeze, and then OBV rockets to the upside on the squeeze, and then you consolidate here as OBV is consolidating, and then the next time you break all-time high OBV again, this blue vertical line, is right before you squeeze again in June. And then you get the rest of the pump up on the OBV, and then again, lower highs and lower lows here all the way down. OBV has pretty much just consolidated flat here and has actually broke out now and retested on this triangle here, while at the same time the macro has broke out and is now in the middle of the retest. So I'm expecting OBV to find a bounce here and find all-time highs, and that will be lining up with our squeeze, which I've been saying for the past 5 or 6 months now. The squeeze, the catalyst for the squeeze is the reverse split and the conversion. And the reverse split's going through tomorrow, conversion's going through on Friday. I'm not saying we're peaking tomorrow or Friday. I am saying that this is the catalyst, and next week things should be getting very, very interesting for us. So that's pretty much all I wanted to talk about today. This looks very good. Just reverting to the previous tracking that I had, this makes perfect sense. And then just, showing you, this is what I had when we last left off, when I was live streaming, looking for the gap down to the white line here. We actually gap down below the white line, but the price action from the gap down is identical. And again, what happened here when we came lower is we checked off the lower low, the final landmark to the downside. Arbitrage, AMC and meet at a common ground for the conversion to go through, which is happening Friday. Stop losses pretty much at all-time lows. Anyone who had stops at all-time lows or slightly above that have all gotten triggered now. And people are freaking out about the conversion reverse split to begin with. So I wouldn't even doubt that some people are just panic selling at this point. So just shaking people out last minute right before we take off. And at the same time filling all of the open gaps to the downside on the macro before we get a new macro, which theoretically should begin with a squeeze and possibly would be MOAS. So this is where I think we are as far as the tracking goes, and I'm dead set on this. I am dead set on this tracking now. The rest of the macro, here it is. Whenever the bottom is in, and I'm assuming it is, I'm not 100% sure the bottom's in here, but I'm assuming the bottom's in now. It should be an uptrend off the rest of this price action, and then the gap up higher, the macro fractal break. After you finish this price action here, it's a gap up, which is your macro break, and then a straight line to your squeeze from there. What I would love to see for tomorrow and Friday is this price action here. And theoretically, I'm not saying this has to happen Thursday, Friday, but I want to see this. This is what I want to see next as far as the price action goes, is an uptrend and this movement here. That's what I'm going to be looking for. And again, the OBV is supporting the fact that this was actually the breakout, and what we're seeing now is the retest. So all-time high OBV here, trading this triangle for 2 years straight, actually broke out on this breakout here and is retesting on the retest as well. Almost hit all-time highs on this move, while stock price is almost at all-time lows. So this looks absolutely perfect. Leaving the video there. I will be back with an update tomorrow. Things look great. They honestly look perfect. This whole time, reverse split conversion is the catalyst for the squeeze. It's going down tomorrow. Reverse split tomorrow, conversion Friday. I'm expecting next week to be very fun for us. So that's it for the video. I'll catch you guys in the next one.